Joining me now to break down the technicals or the chart patterns and what they tell us is Frank Cappelleri. He's the founder and president at CappThesis. Frank, it's great to see you. And as we are near the beginning of the second quarter here, what are the charts telling you?
Hi, Kristen. Thanks so much for having me. Great to see you again. Well, let's start with the S&P 500. As we know, it's having a tough time after coming back from the February to March sell-off. And so one easy way to see this is just how it's been doing versus its long-term 200-day moving average, which has been in the news. Now, I think we should look back at two recent periods to get an idea of how this can play out. Number one, October 2023 was the last time that the S&P undercut the line. Now, back then, remember, we're coming back from a correction like now, but that one was over 3 months. This one, of course, happened in about 3 weeks. So when the S&P went back above that line, it led to nearly 2 more years, right, of uptrending action. Now, before that, much different, happened in January 2022. Now, of course, that time is similar to now because we're coming back from the COVID lows, almost 2 years of a strong rally, just like now. When the market undercut that line then, we also did get a snapback rally, which failed. And it continued to fail all the way through the low 2022. And it wasn't until March 2023 we finally got back above the line for good. And that's important to recognize because back then, the underlying characteristics changed, meaning that we started to see two-way volatility decrease. If your 1% moves on a day-to-day basis, and chart patterns start to work again on the bullish side. And so for right now, I've got a lot of questions about, well, what if we go back above 200-day moving average the next few weeks? That may matter or may not. What we care about more, again, is the underlying traits that the market has. And those have obviously changed over the last few weeks.
Okay, so what does that tell us then, Frank, big picture about the trend, where the pressure is or the bias is, whether it's to the downside or potentially to the upside here?
Well, we hear the term bear market. Obviously, you're talking about being down 20% from most recent high. But what I care about more is like what goes into that. And so there are a number of things that we track that tells us if we're in an uptrend or a downtrend. All of those lined up to an uptrend for most of 2024. And those got completely changed now over the last few weeks. So again, two-way volatility. We look at how many 1% moves per month, for instance, right? We just had 12 of those, which we haven't seen since 2022. So whether we're in a bear market or not, we're seeing price action that is representative of one. And so we just have to wait that out. Because again, what we look for are bullish patterns to form. And so those clean breakouts, meaning that those whipsaws become less. Of course, that hasn't been the case. We've seen nothing but really acute turns and sharp moves. And so because of that, at the very least, I think we just have to be careful and just be patient at this point for those to develop again.
What are you finding in terms of other securities, other asset classes, Frank, that could tell us a better picture about the state of this market?
Well, I think we all know that gold and silver are going up, right? That's classic safe havens. But beyond that, if we're just looking for areas that are uptrends, whether they're safe havens or not, that's what we want to align ourselves with. So one ETF that I have my eye on is the IGF Global Infrastructure ETF, and that's comprised mostly of utilities, energy, and transportation stocks. So again, maybe safe haven, yes, but also within there is that 40% of that are comprised of US companies. So that means 60% are global. As we know, global indices have been doing much better than the US today. So you look at some of the material names in there on a global basis. Those are the type of areas that, again, have been working for now. We want to look for more areas like that to, identify some relative strength and obviously help us have some outperformance along the way.
It's interesting because the tariff plan, Frank, that we're going to hear more about from President Trump at 4 p.m. Eastern in the Rose Garden is aimed for him at American excellence. But we've actually seen European equities and international stocks recover and in some cases outperform U.S. markets of late. Are you following those charts?
Yes, I'm just touching on that a little bit. And I think it's even more exaggerated with some of these ETFs, like for instance, the EWG Germany ETF, because they're priced in US dollars. And as we know, the dollar has been selling off. So when you have the ordinary indices, the local indices, like the German DAX doing well, and also the dollar coming in, those global ETFs are going to look much, much better, to the point where I think they're almost too extended short term to continue at this pace. But at the same time, we've seen pullbacks along the way, and those pullbacks have been bought much similar to what we saw in the S&P 500 over the last 2 years. So we've identified that those trends are there. You can understand if they're maybe too extended for people to buy, but bigger picture, if you really zoom out with some of these, there's some big potential breakouts going on a multi-year basis, which I think we can't ignore.
Interesting. Frank Cappelleri, great to have you on the show. As always, walking us through the chart patterns, a key element of this market. Frank is the founder and president at CappThesis.
Thanks, Kristen.